my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here's your weekly technical analysis of Paris Rapeseed, Winnipeg Canola and Malaysian palm oil markets. I'll start with Paris Rapeseed. The most recent move higher originated from the drop in the changeover gap at the end of January. Started where the market halted back then at the combination of the optimized February 2021 to date uptrend, currently at 630 3/4, and the rising long moving average, currently 625.5. Prices then utilized these two supports as a base for a move higher, slowly filling in the gap. We next had a shooting star pattern, type 1, bearish, 3 Thursdays ago. That was the largest example of such pattern that I have ever seen. However, the resultant move lower was limited to just the following Friday session, and prices soon started to move erratically higher, which admittedly included a gapping higher action 2 weekends ago. The most significant recent action had been what looked like a strong move up over the 50% projected Fibonacci line at 750 even, which is from where we had so much bearish pressure back in early January. This made a new all-time high last week. However, since then prices have edged lower, such that last night we had a first close back below the 50% projected Fibonacci line, and today a further and apparently a fuller move lower. We now seem to have little below until the earlier March gap, 710 to 718 even, and probably nothing significant until the 50% Fibonacci line of the February to March move at 692 even. So where does that leave us? Well, I must again refer to my annual review on Paris Rapeseed, made at the very start of January this year. In this I refer to a hesitation that the market made, and I quote, "Between October and December last year, on the long-term chart, this doesn't show so well, but it is there. Thus, this has led to yet another target topside. Target X2 is in the 834.5 area. I know this is a big ask, but I can only put down what I see." End of quote. The target is up there, well off the top of my daily chart, but it is still there. Yet, as I said earlier, it doesn't show up so well. This leads me to another comment that I drew from my annual review, and I quote again. This leads to my final points. Since May last year, we have formed a newer, much more acute bull channel, and currently 618.5 to 811.5. To me, it is super acute and thus unsustainable, but it is there and I will not dismiss it, just because of acuteness. End of quote. Well, this channel is still there, and I have transferred it and finessed it such that I am more inclined to refer to it as the February/April 2021 to date ascending wedge pattern, rather than a bull channel. This pattern is the outlying corralling bullish influence on this market and may well show the way higher, should prices choose once again to look that way. Whatever may happen, watch to see if the prices start approaching either trend line, but especially the lower trend line, as this runs parallel to the previously mentioned optimized uptrend, and perhaps more importantly, also runs parallel with the rising long moving average at this time. Winnipeg Canola. Okay, so we saw the sideways rectangle pattern between 945 and 1038.60 that was formed since early November 2021 until late February this year has been triggered. The rising medium moving average, currently at 1010.20, may well have been what caused the upward moves, as the moving average had risen enough to impinge upon the market at the time. Prices reached up and exceeded target X for this pattern in the 1111 area. The further move higher ran into some resistances, mainly from 3 sources, and possibly a fourth. The first was the 100% projected Fibonacci line from the original rectangle at 1131.80. The second was from the 50% projected Fibonacci line for the big action 3 weeks ago at 1142.90. And the final resistance was the new upper time, currently 1144.80 of the mid-January to late February Bullish Andrews Pitchfork. Now this upper time was breached repeatedly but not broken. The fourth potential resistance was actually a market function. the changeover gap between 1097.20 and 1114.60. This gap has tempered the market's move higher, though it has found some support and some bullish incentive from the rising middle time. Plus, interestingly, the short moving average, currently at 1080.70, and the 50% projected Fibonacci line at 1085.10. Seems today's the day that the market may well have a serious attempt higher to try and fill that gap, as we are currently looking at today being a bullish engulfing pattern. So caution. Bursa Malaysia crude palm oil. The September to December 2021 Bullish Andrews Pitchfork had until the end of February been the most recent driver in moving the market higher. Then 2 weeks ago, prices broke above the upper time, currently at 72.66. There then seemed to be some consolidation as prices next moved over the 50% projected Fibonacci line at 74.92 before stalling ahead of the 100% projected Fibonacci line at 81.96 and then dipping back down into the Pitchfork. The dip was limited largely by the significant late February highs between 67.81 to 67.90. Another fresh attempt higher generated from a combination of a immediate countering key reversal up, a bullish engulfing pattern, and a bullish opening along White Mariposa. Prices made it back above the 50% projected Fibonacci line at 74.92, but not much further before last Friday making a significant combined key reversal down and bearish engulfing pattern. This set the stage for the extraordinary moves lower that we have seen this week. That's two gapping moves lower that have seen the market drop and test the rising short medium moving average, currently at 59.38, and set up a new uptrend from December last year. The consequences of this action are mainly, well, so far at least, twofold. Firstly, we have a possible double top from the late February to date action. Now, I have been conservative and careful about this and measured this possible pattern from the second top, the nearer top, not the higher first top. Thus, we have an initial target X in the 57.65 area, with a secondary target X1 in the 54.35 area. The second thing to observe is that the gaps in this market on the way down are roughly bisected by the rising tines of the broken and yet to be retired September-December 2021 Bullish Andrews Pitchfork. This is the Pitchfork that have been showing the bullish angle of attack of the market until late February. Now, this may be coincidence, but I'm inclined not to think so. And actually more that this may be an echo of the previous tines. Thus, I have kept this broken Pitchfork on the daily chart and would suggest that a special watch be made on the tines of this Pitchfork. The upper tine currently at 72.47, the middle tine currently at 64.38, and the lower tine currently at 56.69. These seem to be still effective as support and resistance levels. Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.